Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. We're recording this interview on Thursday, May 8th, 2025. The US dollar gold price has corrected a little bit. It rallied up over $3,300 yesterday or the day before. It's now a little bit below that. The Bitcoin price is also over 100,000 again. The all the capital markets are just kind of going like up and down volatility roller coaster. I mean, bond yields are going up. The stock market, the S&P 500 has rallied. I want to get on a returning guest. He was a banker in London. Also, he worked trading markets with the London Bullion Metals Exchange, LBMA, excuse me, and other markets over there in London for many, many years. He was one of the first financial YouTubers along with me. I think he started his YouTube channel back in 2010. He has way over 100,000 subscribers. Mario Innecco of the Innecco 64 YouTube channel. Thank you for joining me.
You're welcome. And yeah, I started my channel in late 2015. But yes, I was probably one of the early ones.
Oh, I thought it was 2010. I think I saw you on interviews then before that. I think you were doing a lot of interviews. It says 2013 here. Joined 2013 on your YouTube channel. I just looked it up.
Yeah, it's just that's when I opened my YouTube account, but I started making videos really in 2015.
Okay, very good. Yeah, and you've been doing what every single day now for a very, very long time.
Yeah, I post. I mean, I've learned that I don't have to do a video every day, but for example, I can do a video and then do an interview with someone else and then post that interview the next day. But yeah, I try to post every day, and the thing is, people expect it every day, so you have to keep going, be consistent.
Well, and the schedule is grueling, man. I mean, like the average person doesn't know how grueling the schedule is. I mean, you're competing against large companies now in the space in financial YouTube. Like I almost went and worked for a larger company. They're spending a lot of money each year growing
Yeah,
their YouTube channels now.
and there's a lot of, unfortunately, a lot of AI channels that take content like ours and yeah, they basically steal our content and create AI videos. They're popping up all over the place.
Yeah, you can't fully stop it, man. I mean, like the learning language models, artificial intelligence, the cat is out of the bag, the genie is out of the bottle on that one. You can't fully stop it at this point.
Yeah.
So I want to ask you about gold and gold demand before we get into stuff going on in London, the LBMA, other countries asking for their gold back, their gold tonnage. Why do you think that gold demand has increased so much in the last 3 years?
Um, I think it's got to do with the special military operation or war, if you want to call it, between Russia and Ukraine that started in February 2022, and the response by the West to that, and the response was to freeze Russia's reserves of $300 billion or so, basically steal their reserves. So that raised red flags for the rest of the world because Europe and the US are not at war with Russia. It was only the Ukraine. And usually you don't do that to people's reserves or to countries' reserves. So I think that woke people up in other countries like Russia. Even Poland has been buying a lot of gold because they realize that their reserves can be frozen. But if you buy physical gold, and store it in your own country, they can't touch it. It's a little bit like the stackers. We don't want to keep our money with the bank because they can freeze your account, like they did with the Canadian truckers protest. But if you keep your physical gold and silver out of the system, they can't take it. So I think it's the same thing for sovereign nations. And I think they're continuing to do it for the fourth year. It started in 2022. It kept going 23, 24. And I think just earlier today, the Chinese announced they bought another 2 tons in April. And I think they're buying a lot more, Jason, the Chinese via unofficial channels. Unofficial channels, I mean, not really the People's Bank of China.
So do you mean like off the LBMA? So you mean like kind of that dark pool area or the non-official channels. So the bullion banks for listeners out there, there's the COMEX, there's the LBMA. But if you're a central bank or you're a really high net worth, a billionaire, you can still get gold tonnage or a large amount of silver. You don't have to go through the normal exchanges like that, right?
Well, they could still go through the LBMA, but it's just that it wouldn't be the PBOC. But you're right. I mean, like I've heard that the People's Liberation Army, they've been buying gold since the inception of communist China, or some other state-owned enterprises might be going to Africa and buying gold right off the mines as well. And yeah, LBMA is possible as well, but it's just like what the PBOC reports. Yeah.
So you think then that the policies out of Washington, D.C., basically both parties, and they're taking bad advice, what, from academics, university professors, PhD economists, the Russia sanctions, they basically backfired. It's similar to what a Looney Tunes commercial on Yosemite Sam or Wile E. Coyote thinking that they've got Bugs Bunny, and then all of a sudden, what, they shoot themselves in the foot or the cannon blows up in their face and they're falling off the cliff.
Well, that's right. And some people even think that the powers behind the scene even do it on purpose. But I personally think a lot of the politicians they're not very clever, and well, most of them I would say, and they do things without thinking of the consequences. And I think I know there are a lot of Trump fans in the gold and silver community, and I think he's a much better president than Biden. But a lot of what he's doing is alienating other nations and pushing them to try to build new trade partnerships, and that's going to hurt the U.S. I think as well. So even what Trump's doing is having a is backfiring, in my opinion. I've read recently that even Japan, who's like a very close ally of the United States, they're not playing ball with the idea of isolating China. That Secretary of the Treasury Bessent spoke about a month or so ago. So yeah, you have to be very careful sometimes. Politicians don't think of the consequences in the real world.
And wasn't there also stories that came out in the last week or so from Japan? I don't know if it's true or not, but at least they leaked it to American mainstream financial media. And they were talking about that as part of trade negotiations for leverage, Japan could potentially sell more treasuries. So, I mean, that would have been unthinkable for them to even say that publicly years ago.
Yeah, I think it was one of the I think it was a minister, Kato was his surname, but then I think they backtracked afterwards because I don't think the Americans probably were too happy about that. But I think that's still possible. I mean, Japan holds $1.3 trillion of reserves, and yeah, they could use that as a bargaining tool.
I think the main problem, Mario, is that we've gotten to the point now where they've kicked the politicians, whether it's the Federal Reserve Bank, members of Congress, the White House, they've just kicked the can down the road so many years with zero interest rate policy, bailouts, quantitative easing, all these lever pulling, especially, and they got away with it for so long because the dollar was world reserve currency. We could export dollars and treasuries. Interest rates were low. I think the U.S. was only paying, what, $300 billion a year in interest payments, no matter how much the national debt grew. That's insanely cheap. It's like a teaser on a credit card. And so they did all this crazy spending for the last 15 or so years, but now, like, I think we've gotten to the point where they can't really kick the can down the road. Trump's inherited a mess, and there's basically, I don't really see any way for them to avoid pain at this point.
Well, I don't either, and but the problem is that America was very happy with getting all the cheap goods from China and elsewhere, and they could just print money out of thin air. Uh, they didn't have to earn foreign currencies. I saw a post by Peter Schiff, I think yesterday, and he said, I'm paraphrasing, he said, the Chinese have are our great enemy. You know, they've bombarded us with cheap electronics, cheap clothing, and now we're like making them seem like it's their fault. They just played the game, and so did a lot of other countries, and that's why I think it's not going to be as easy for the United States to get good trade deals because foreigners are going to say it wasn't really our fault. Why are you having a go at us? You got all these real goods or real commodities from us, and all we have now is like pieces of paper. So yeah, that's the way I see it. And maybe I see it like this because I'm kind of neutral and I'm not biased. You know, I'm just looking at the reality of things.
Well, for our listeners out there, the way the global financial system was set up post World War II, you had the Bretton Woods system. It was basically a dollar standard. At first, you had an international gold standard, which Richard Nixon then suspended. So it went to a full fiat currency dollar standard after that. But a lot of other countries, their economies, they would just produce those goods, like Mario said, and they would earn US dollars, but then they'd recycle their trade surpluses or foreign exchange reserves into US Treasuries. So that was the system we had for many, many decades post World War II. But the US really was not producing a lot of stuff, and a lot of the higher paying jobs in the US were leaving.
Yeah, and also up until 1971, there wasn't much of a problem because the dollar was known as being as good as gold because foreigners could bring, let's say, $1,000 that they had in surplus and exchange it for gold at $35 an ounce. But then when Richard Nixon closed the gold window, yeah, there was a period of instability, but then they worked out this deal with the Saudis to make sure the Saudis only sold their oil in dollars and seeing that the Saudis were huge producers of oil and a lot of other countries needed that oil, they would need to earn the dollars, not gold. And the way to earn dollars was to try to sell as much as they could cheaply to the US. And that's why the US got stuck with huge deficits. But both sides of the aisle, their philosophy was that deficits didn't matter. I think even Dick Cheney said that. But now deficits do matter because they've become
Accumulated to large numbers.
accumulated.
Yeah, the law of
Yeah,
large numbers.
yeah, $37 trillion in national debt and over 100, I think, in total debt. You know, not just government, but corporate, municipal, and consumer debt.
And we're seeing
So
that with the treasury yields, Mario, where I think Trump and Bissent thought that with some of their policies, they'd get the US Treasury yields down, and kind of the opposite has happened. The Treasury yields keep spiking.
yeah, and I think it goes beyond Trump investment because I personally think the bull market in treasuries we saw, excuse me, from 1981 to 2020 is finished, and it doesn't really matter what they do. I think the trend is for higher yields and lower treasury prices. And I noticed that the Fed now is participating in auctions. I think they bought about 34 billion yesterday and the day before of 3 and 10 years. And today I just saw that they bought another 8 billion of 30 years. And yields are up today, I think about 10 basis points at the longer end. Can you imagine if they hadn't bought the 30-year at the Treasury auction today? So yeah, I think it's going to be a big problem.
I
The
think it's a math problem at this point. I think like pretty much no matter what they try, there's just no way of avoiding pain, like we said earlier, and the math is just really against them that the national debt's going to keep growing. Even with the Trump tax cuts and some of the other stuff, didn't Senator Ron Paul, he said that they still wanted to raise in a congressional speech the debt ceiling about another 5 trillion. So even though we see all these headlines, right, that Doge is cutting billions of dollars here, billions of dollars there. I mean, they still like with the other hand, they're sneaking around and they're raising the debt ceiling Congress is by another 5 trillion or so.
Yeah, and I saw that they want to raise the military budget from 800 billion or so to a trillion. So I think yeah, the when push comes to shove, they're going to keep spending, and yeah, Trump wants 4.5 trillion in tax cuts, but he's only going to cut 2 trillion in spending, which doesn't add up. Yes, his view is that the trade deals that he'll make and also the deregulation will make up for it. But uh, I think it's not going to happen overnight when you stop not just finished goods coming from China, but intermediate goods that are part of the how can I say the supply chain, because China doesn't just make goods, but they have a whole they make intermediate goods and everything else, and also other countries. It's going to take years to build that supply chain infrastructure in the U.S. So yeah, I don't think it's going to be as plain sailing as the Trump administration makes it to be.
Well, I agree if he cuts taxes in the private sector, makes it easier for to invest in what factories and mining and stuff. This is good long term, but it's not a short term fix. But I think if you're a foreign country, like a foreign government, a foreign central bank, you look at the basic math here sober. Don't look at either political party, because I think the policies from both political parties in Congress and the White House have been bad for years now right here out of Washington, D.C. You look at the bad policies and the math problem. I mean, we've gone, like I said earlier, from 300 billion dollars per year in interest payments on the national debt. The base case now is $1 trillion or more, and the debt's still growing rapidly no matter what Congress or the White House, what policies they decide to do. We had a record amount of what a lot of people are not talking about, Mario, is we had a record amount of tax receipts here in the US. I think 4.7 trillion came in, and there's still all these problems with budget deficits and trade deficits.
Yeah.
So the Treasury was flush with cash, and still there's all these spending problems.
Yeah, I mean, I think the budget deficit right now is running at 6% of GDP, which is something that happens in a recession, but not in an economy that's supposedly doing okay. Can you imagine when a crisis does break out, how well that deficit will probably go to 10 or 12%, just like it did during COVID?
Or they have to come up with new numbers with the CPI or the jobs reports. Because I mean, like we're seeing now that a lot of the data was fake; it was revised downwards. I think the consumer price index, the real inflation rate, is way higher than the CPI is claiming. Even though the energy prices have been down lately, I think there's a lot of other components, especially with the tariffs,
Yeah.
with the taxes. I think a lot of business owners are seeing that their costs are still rising.
Yeah, I don't buy into this. I'm hearing a lot of people saying, "Oh, the Fed needs to cut rates because oil prices are down, and that means lower inflation." But as you know, Jason, oil prices are not what create inflation. What creates inflation is the increase in the fiat currency and also in fiat currency credit. And I've noticed that M2 recently is gone back up above the top that we made on that huge run up during COVID from 2020 to 2022. It had come down the last 2.5 years or so, but now M2 is picking up again. Oil prices going down below 60 doesn't mean there's no inflation, and they could very well go back up to like 70 or 75. I'm not saying that the Fed shouldn't cut rates, but I'm saying that's not a good reason to say the Fed should cut rates, because if they cut rates, then you can bet that oil prices start going back up.
Yeah, and the money supply, I think from 2020 to 2022, to add your points there, I think M2 didn't increase by 40%. So that's a lot of monetary inflation that the CPI claimed only was 9% inflation. There's no way if the money supply grew by that much.
Yeah, I don't trust these CPIs. I mean, here in the UK, in 2022, they changed the methodology of the CPI. And I know this because I did videos about the Bank of England. They have a target of 2% CPI. And I did a video prior to 2022, and I saw from the Bank of England inflation calculator that the average CPI from 1997 to 2020 was 2.7%. 1997 was the year that Tony Blair gave the Bank of England independence and set that target of 2%. But after the change in 2022, I looked at the same period of time in the Bank of England calculator, and it had changed from 2.7 to 1.9. So they just change things to make it look lower. And you probably heard of shadow stats. I mean, looking at the way they calculated CPI in 1980, it would be probably more than 10% right now.
Yeah, I'm sure they played similar games to the Bureau of Labor Statistics here in the US. I mean, UK, I've seen you guys had a really bad energy and electricity spike. You had huge shrinkflation. I've seen that. So there's a lot of stagflation and shrinkflation in the UK. I think you created an enormous amount of currency too during the pandemic as well.
Oh yeah, definitely. And it's I mean, just a little anecdotal evidence. I like buying these it comes from France, but it's like a sausage, little sausages as a snack. And beginning of the year, there were £3 50, and then they went up to £4 a month ago. And today I bought some more. It was £4 25. So this is, I mean, it doesn't seem a lot, but it just keeps changing every month. And from what I've read about history, like let's say the Weimar hyperinflation or the fiat money inflation in France in the Revolutionary War, the first thing that starts going up in prices is food, and I think we're seeing that everywhere. My wife told me she was listening to this YouTuber from Austria. I think her name is Lily or something. She's very popular, and apparently, food prices in Austria have gone up 70% in the last 12 months.
Yeah, I mean, I've seen videos from my friend in Australia who's on business TV, and she's showing like the prices of just like a bunch of consumer items in the convenience store in Sydney, Australia, and other major cities. It's wild how much the prices are up. But those currencies, those countries, their currencies, you've seen the gold price at or near an all-time high before the US dollar gold price moves. So those other, the gold price in Australian dollars, the gold price in Japanese yen, the gold price in what Chinese yuan, and the euro, all those gold prices were higher than the US dollar gold price for the last couple of years until recently.
Yeah, and I think they're all going to continue to sink. The currencies, i.e., gold is going to go up, and those currencies are going to buy less gold, the dollar included. The yen has been the leader, yeah, but now the other currencies have caught up. So yeah, we've made new all-time highs in all the major currencies, British pound included this year.
So I want to ask you about this narrative that the bullion banks have said about Goldman. They've claimed earlier this year that the tariffs that Trump was putting on that caused a huge spike in the gold demand. Do you think that that's true? Do you think that spin and that there was serious shortages of tonnage? Because I was interviewing other people that were checking the LBMA data, and they said that normally what it's like T plus 2 or 3 days if you order on the LBMA to get your gold delivered, but they were saying that the deliveries had been delayed out 30 days or something or longer in some cases.
Well, no, it's even longer. And I made a video about this on January 29th. I remember the day because I think it was really significant. The FT, who's usually bullion bank friendly, they came out and said that the spot delivery at the Bank of England or LBMA mechanism was T plus 4 to 8 weeks. And when I read that, I thought, wow, this is very significant. And I did I usually only do one video a day, but I did a second one just to report that. And at the time, gold was around $2,600 an ounce. And I said the only way for this to improve is for the price of gold to go up. And we have gone up. And I think the reason it happened has got nothing to do with the possibilities at the time of tariffs. It's more to do with some kind of repatriation of physical gold to the United States. And there's a lot of speculation whether it's for the Treasury, whether the Trump administration is looking to revalue gold and they have to do an audit. And all the gold, a lot of the gold has been leased out to Europe, so they have to bring it back. Or it could be also big investors being concerned about instability in Europe vis-a-vis Russia and war. They want physical gold in the U.S., not in London. So we saw like a few weeks ago when the big was it Liberation Day or when they announced all the tariffs, they said that bullion would be exempt. And after that, gold traded up to a new high of 3,500. So if it was because of tariffs, gold should have dropped a few weeks ago and never not have made a new high at 3,500. So there's something else going on. And I think basically the LBMA paper game and COMEX paper game that's unraveling because I think actually the Chinese Shanghai Gold Exchange and yeah, the way they do business, uh, all the gold pricing is moving towards that part of the world because they buy a lot more gold, not just the government, but also the public. And the Chinese are trying to also make the yuan more palatable for other Asian countries to do trade. So they're setting up the PBOC is setting up and the Shanghai Gold Exchange. They're setting up depositories in other countries so that if countries have surpluses in yuan, they can go and exchange that surplus for physical gold. And I think they're even opening one in Saudi Arabia. So I think that's what's happening, Jason, because the Chinese and the rest of the world, they see gold as a real physical commodity, not a way to speculate and with paper. And I think that's what's going on. The LBMA COMEX paper game is is long in the tooth, and it's it's gonna it's not gonna be the leader of the gold market, in my opinion, very soon. And that's going to be reflected in a much higher price because the Chinese, they don't want paper, they want physical.
So with you said the delays for LBMA delivery were up to 4 to 8 weeks back at the end
Yeah.
of January 2025. Now that the gold price has gone up, what, over $500 lately over the last like 6 or 7 months, are we seeing the delays come back down, or are the delays still a lot higher than 2 or 3 days for delivery then?
Yeah, I'm not too sure what's happened to them exactly because the LBMA is a over-the-counter market and it's not information that's readily or publicly available. But yeah, I would say there's probably still a bit of a delay, but I don't know exactly how much it is. It might be back to normal right now because of the prices. But what I've heard is that the Bank of England has encouraged a lot of the sovereign countries that keep gold with the Bank of England to lease it. Uh, so they're leasing that gold, and the Bank of England takes that gold and delivers it. But David Jensen, I mean, I don't know if you know him. He probably follows this a lot closer than I do.
Yeah, I've known David for many, many years. I don't think I have a new email address on him. I know he has a Substack available for our listeners to check out. A few of the articles are free, but I think a trend that we've been seeing a lot, Mario, lately is these governments, whether it's India. I think Ronan Manley wrote an article about this in the last couple of years that India was trying to repatriate all their gold from the Bank of England because they thought the Bank of England had sold or leased their gold without their permission. So I think India, excuse me, was trying to repatriate their gold from the Bank of England. So also Germany's trying to get their gold from London and also from the U.S. And I think even Poland is trying to repatriate their gold.
Yeah, I mean, Germany, the Bundesbank from 2013 to 2017, they repatriated 300 tons. So it took like 4 years, 4 years to repatriate 300 tons. And now I think there's a push for Germany to get its 1,200 tons that is still at the New York Fed back. I mean, back in 2011, Venezuela actually repatriated like almost 100 tons from the Bank of England, and they did send it right away. And that's when gold went from like 1,400 to 1,900. But when a few years ago, they asked for the last of their gold, which wasn't that much, and they've kind of blocked it. So I don't think you can really trust the Bank of England when push comes to shove, especially with what happened after 2022 with the Russian reserves, not gold, of course, but their bond reserves, paper reserves. They could do the same thing to gold, and I think it's a really bad idea. If I was running a central bank or a part of a treasury and had a lot of gold in London, I would decide bring the gold back. Yeah, definitely.
Well, I think again we're back to policy mistakes from Washington D.C. from both political parties because we're at the point here now where the U.S. Treasury Department needs other buyers similar in size to either China or Japan to go and buy U.S. Treasuries to get the yields down, so the U.S. can refinance over $7 trillion of Treasury debt coming up at a lower interest rate. But the policies that have been done, as you said earlier in the interview, over the last couple of years, post Russia sanctions, they've been so bad. The budget deficits, the spending, the inflation from Congress and the White House has been so bad that people are just not incentivized to buy treasuries. They don't trust DC. They don't like the math and the budget deficits. So they've been buying gold instead. We see this in the data that the dollar cost averaging from the central banks, Mario, they're not buying treasuries. They've decided as a macro trade for their foreign exchange reserves, trade surpluses, they're instead of treasuries, they're buying gold now more each month.
Yeah, and I don't think central banks care about the price. They only care about, how many tons they have, and they want to make sure to keep increasing the tonnage. They're not like a speculator. And the other thing, aside from the policies of the last few years, I, I think the way Trump is being so aggressive with his tariff war is putting a lot of countries off in that they're asking themselves, can we really trust the Americans, on both sides of the aisle? Because should we really invest money in America and build factories there when they can come out and do whatever they want, flex their muscles? Yeah, I think maybe he's got some, he's doing something, some 4D chess that's going to turn out great, but I don't see it. I mean, he's alienating trade partners even more.
Well, I mean, if people were buying the treasuries in size, wouldn't the yields be coming down on the 10 years treasury or the longer bonds? And we're just not
Oh
seeing that
yeah.
lately.
No, no, that's right. That's right. And I think it started even before the trade or tariff war. And probably not just because of the sanction regimes or freezing reserves, but also because of the mathematical situation. Like you said, the U.S. has got running huge budget deficits, current account, trade deficits, and the Republicans they market themselves as being fiscally prudent, but when push comes to shove, when the debt ceiling needs to be increased, they always bend. So that as well doesn't help. The fact that America's running such huge deficits, people are thinking, we're selling real things for a currency that's losing value at a rate of knots.
I have the 10 years treasury yield up. It's at 4.37% right now. The 1 year chart, I mean, it's been a roller coaster. They did get the yields down a little bit
Yeah.
at the
Well,
beginning of
I,
April. They got them
yeah.
down below four for a very, very brief period, but then we started to rally a lot again.
Yeah, I mean, I remember it got to 385 and then the stock market started crashing and yields instead of going lower like they would normally, actually spiked higher and that was a big red flag. I'm looking now the 10 years at 439, which is the high of the day, up about 12 basis points. And even the 3 year and the 2 year are up quite a bit today, which makes me think that the market doesn't expect too much from the Fed going forward in terms of cuts. And I think Besson, he's stated that his line in the sand is the 5% level for the 10 year, but we're not there right now. We're at 440 almost, but it could move very quickly. Um, we could be there in a week or two if things get out of hand.
And normally in the past, when interest rates were this high, you'd see a lot of other countries buy the 10 years treasury or the longer duration bonds and get a higher yield, recycle those, and collect interest payments. But with the gold price where it is, with the policies where it is in DC, I mean, the incentive is just not there for a lot of large pools of capital to go and buy US treasuries. Now, I know a lot of macro experts, and I'm sure you've seen these, they keep calling for what a rally in US treasuries, but they've been wrong a lot during the treasury bond bear market that started a couple of years ago.
Oh yeah, I mean, I have people that I know that are even hold gold and are very bullish gold that still think if we have a recession that the yields are going to go back towards one or zero, and I personally don't see that at all.
Well, DC would love that. I mean, if they do that, I mean, you might see like trillions of dollars of stimulus packages
Oh
and other
yeah,
stuff.
well, yeah, that would only happen if they did 10 trillion in QE over 2 years.
No, but
Uh,
I'm saying for some miracle, if rates did fall, you'd see like Trump announce some type of refinancing of the national debt, and new spent Congress would be like that would be like a wet dream for Congress that they could
oh
spend
yeah,
more at lower interest rates.
yeah, and gold would skyrocket even more, I would say.
Yeah, because unfortunately, Mario, I mean, like the policies when interest rates were that low for so long with zero interest rate policy and the Fed with doing quantitative easing and subsidizing mortgage-backed securities and expanding its balance sheet, you had both political parties in Congress. I mean, they loved to spend. They thought it was like free money, basically. And now here 10, 15 years later, that we're getting the bill with a much higher interest payment each year.
Well, that's right. That's right.
Well, and I think this is why the average person, large pools of capital, so the generalist fund manager, they had zero gold exposure. I want to just say that like for many, many years, a lot of these large pools of capital, tens of billions of dollars, 100 billion, these let's see, your pension funds, these generalist fund managers that normally just buy some treasuries, some S&P 500, Nasdaq, big tech companies, U.S. stocks, maybe diversified into other stocks and other industries. I think for the first time in many, many years, Mario, I think they're starting to do extensive due diligence on gold and gold stocks.
Yeah, but I think they still have very little exposure to it. So there's a lot of room on the upside. And think about Berkshire Hathaway. They've got 335 billion of cash or near cash, like T-bills. And yeah, I wouldn't be surprised if we hear before the end of the year that they've started buying mining companies or maybe even physical gold. And I saw something that family offices, which are kind of like private hedge funds in the US, this is US statistics, I think, not like worldwide family offices, but their percentage that they hold of assets in gold is only like 1%, which is insignificant amount, I would say.
Well, correct me if I'm wrong. Didn't a little over 25 years ago, give or take 25 years, so late 1990s, Warren Buffett, didn't he try to stockpile an enormous amount of physical silver by buying on the LBMA? He got to over 100 million ounces of physical silver. Now, depending upon who you're talking to, people say that like a lot of the silver that he bought, it became the basis for the SLV, the Physical Silver Trust.
I'm not sure about the SOV. I don't know what the situation there is, but what I've read, and I read this from Martin Armstrong research, that it used to come out actually when he was still in prison uh, on Scribd, and I remember reading he told us in his research that Warren Buffett actually was contacted by the Bank of England and told to stop buying silver because it was creating a problem. So I think he started buying when it was $3 and he got out at 7.
I think he had to sell it. Yeah, he was like basically forced to
Yeah,
liquidate his position too quickly, and he only got out at like
yeah,
$4.50 for five. He hardly made any money, and I
I
think
know.
within
Yeah,
like a couple of years, the silver price went up to $7 or $8. So he would have doubled
yeah.
his money had he held it.
But I think it was the central banks who thought, you stop that because you start buying silver like that, it drive the price higher. It will drive gold higher too. And the thing is, I don't think the central banks, well, they didn't have any silver at the time, so they had to tell them to stop it because they couldn't manipulate it.
Wasn't Morgan Stanley in London with their custodial vaults? They were also selling customers custodial vaults. They were sued in a class action, so they had sold a lot of their customers physical silver that was supposed to be in segregated custodial accounts, and then they sold it onto the open market. But I think Buffett, one of the main reasons you brought up like potentially the speculation there that the central bankers threatened him, he probably saw what the Hunt brothers did to him, and someone said, "Oh, you don't want to turn into a Bunker Hunt, the Hunt brothers,
Yeah,
right? What happened to
that's
that?" So he was
possible.
like, "Okay, I'll sell the silver. Okay, I'm gone. I'm not
Yeah.
going to get lose billions of dollars in lawsuits and other stuff."
Yeah, no, I definitely think that's what it is. And then during the '08 crisis, they paid him back by saying, bail out, invest 5 billion in Goldman Sachs, and we'll make sure Goldman Sachs stays whole and you'll make a lot of money. So they paid him back. That's how it works, I think. Speculation, of course, but you just have to put two and two together and yeah, work it out.
Now I know you have a lot of bullion contacts in London. Are the Swiss gold refiners are is the demand for Asian retail investors so strong that the Swiss gold refiners they're trying to get source gold and silver, especially gold, everywhere they can. So LBMA, old coins and bars, they're calling up banks, they're calling up U.S. bullion dealers because they can get what the bullion from U.S. ones near spot prices. They don't have to pay a premium. They want to get that gold and they want to ship it to Switzerland to recast it into 4/9 kilobars and sell it into China. Do you hear a lot of that's going on right now?
I mean, yeah, Switzerland is like a place where a lot of the refining is done, but I haven't really. I mean, I have retail contacts in the bullion market, but to be honest, I don't really have contacts in the wholesale, bullion banks. But I wouldn't be surprised if that's happening because, like in Hong Kong now as well, they're opening the Hong Kong exchange, commodity exchange, and like their version of the COMEX, they're opening it to retail so they can buy physical gold like straight off the exchange, like as small as like I don't know, an ounce, 2 ounces, 5 ounces, and at very tight spreads. So yeah, I think a lot of gold is flowing to China, and it will, if it's coming from Europe, it will, unless it's a kilo bar, because I think the Chinese and the Hong Kong investors they like kilo bars, so it would have to go to Switzerland, and they would recast it into kilo bars and then ship it to that part of the world, to Asia.
Yeah, the reason I ask is because retail. retail bullion demand in the US and Canada. I mean, I've been speaking to bullion dealers the last couple weeks. It just sounds so low. I mean, there's people want to sell their gold jewelry, silver jewelry. People need cash. People are chasing Bitcoin. People are, they bought retail investors over the last month. I think they bought $40 billion buying the dip for US stocks. The demand for physical gold and silver for retail bullion investors in the US and Canada is just not there. So one would think that the Swiss gold refiners or someone else would go and buy that cheap bullion and then get it recast at a refinery and then sell it at a premium into Asia.
It's probably happening, and the same thing here. As far as the retail sector is concerned, there's very little interest as well. It's what's driving the gold price higher is more central banks, I would say, and maybe smart money like big investors who are usually ahead of the crowd.
Yeah, I think the main macro chart, as we discussed earlier, I think it's this bear market in government bonds. And it's not just US Treasuries. I mean, you see it with all these governments, whether it's Japan, the European Union countries, the United Kingdom, emerging markets. I mean, a lot of this government debt, they're doing yield curve control, they're monetizing debt, there's issues with their currencies. I just see so many red flags with government spending and growth in government bonds that it looks to me like this is a huge problem coming up with like what Luke Roman and Lynn Alden have been warning about for years about like what debt monetization, financial repression, yield curve control, that all these governments have finally gotten to this math problem point and we're in a global government bond bear market.
Well, I couldn't agree more. And because it's not just the US is the leader of this system, fiat currency, debt-based system, and all the other countries, currencies or government debt, they're all derivatives of the dollar, the fiat dollar system. So, yeah, and they have the same problems in terms of the math, as you say it. The bigger the debt gets, the the more troublesome it becomes. It compounds. you know, uh, in interest rate compound is like great if you're a saver, but horrible if you're a debtor that's getting into more and more debt. And the thing with this fiat currency system is that every time you issue new debt to pay the old debt, you have to issue also this debt carries a coupon that pays more, pays the creditor more, but there's never enough money or currency out there to pay the coupon, so you have to issue more debt to pay that. It's like a vicious circle.
It sounds like a
And
Ponzi scheme
yeah, yeah, of course. Yeah, that's right.
where the debt just grows and it's never fully paid off.
That's right. And the unfortunately the politicians everywhere around the world and on both sides of the political spectrum, uh, they are unwilling to like allow the system to correct. And by correcting, I mean to have a huge depression, deflationary depression, because that's the only way. Well, that's one of the ways to destroy the debt. But eventually, I think the debt will be destroyed, but it will be through hyperinflation. And that's where we're going.
And Mario, it even looks like China is starting to have this because I think they repegged the Chinese yuan to the dollar peg at a different exchange rate. They're in the process of some type of quantitative easing, lowering interest rates, trying to add liquidity to the system. There's been rumors of a larger Chinese yuan devaluation coming. They may do some type of debt monetization and bailouts for their banking system and the real estate market. So it just looks like a total mess here. Even China, and they were running trade surpluses. So the Chinese citizen, they don't want to save in their own currency either, Chinese yuan. They want to diversify, and that's why gold demand has been silver demand has been so strong out of China in the last couple of years.
Yeah, and they have like a international yuan and a domestic one. Yeah, I mean, all countries are in pretty bad shape in terms of debt, China included. One saving grace for the Chinese is I think they have a lot of gold, not just the government, but the Chinese people. At least the Chinese government has actually been encouraging Chinese citizens to buy gold. And even insurance companies, they've been given the green light to put 1% of their assets in gold in China. So yeah, that's the only thing that will make them probably weather the storm better than most.
And you're also starting to see pension funds too in Asia. I think in Thailand, large pension fund in Thailand bought over $20 billion worth of physical gold in the last 12 months. So these generalist fund managers, these large pools of capital that we were discussing earlier, they normally would not have bought gold, or maybe they had 1% gold. I think we're going to go from 0% gold allocation for some of these players up to 2% or more gold allocation. There's just not a lot, especially if they buy physical gold and make sure they own physical gold, like the Sprout Physical Gold Trust or some of these other metals trusts. There's just not a lot of gold. There's the function to create more supply. It's going to have to be a higher price, I think.
Yeah, no, definitely. And like you said, now people want the real thing. In the old days, ETFs and would be enough. But I think people are wising up to the fact that you need real physical gold and silver for that matter.
So the main thing I hear from a lot of these macro experts, and a lot of them are current or former bond fund managers at a bank, is they keep trying to pick a top in the gold price. The gold price is about to crash. The treasury market's about to have a rally. The structural stuff that we talked about earlier, the fundamental problems, the math problems with the government debts, the budget deficits, I just don't see another treasury bond bull market for long. Maybe a slight rally or something like that. But as soon as the yields drop, Mario, I mean, Trump, Ascent, whoever's controlling Congress, they're going to spend like crazy. They're going to try to refinance the debt, and they're going to spend even more. The debt's going to grow even faster then.
Yeah, no, I agree. I mean, there has been a lot of people saying, well, gold is going to correct. But looking at the very long-term charts, like logarithmic charts, like quarterly or monthly, gold looks like it's just starting to take off, really. And I think the best thing to do is to just sit tight and not get excited when it goes up too much, and vice versa. I mean, don't get too despondent when it goes down because yeah, it's gonna get even more and more wild. Like nowadays, we're seeing $100 moves up and down regularly, and yeah, so that's the way I see it. And like you said, they're gonna have to keep spending fiscally and also monetarily, i.e., QE or yield curve control. I mean, we're going the way of Japan. You know, Japan has been doing this for a very long time. And you've seen what the price of gold in Japanese yen has done. It's gone like from 60,000 back around the '08 crisis to almost 500,000 yen.
It's a parabolic chart. Yeah, it's like
Yeah.
that. The gold price in a lot of other currencies, especially Japanese yen and some of the other currencies,
Yeah.
is going Australian dollar too. That one's
Yeah.
up a lot.
Yeah.
I think one thing that most people don't understand, the ones that are calling it top in gold, that gold price is over, the rally's over, it's going to crash. They keep calling that. I've seen people on financial Twitter with large accounts and large newsletters, like every month or two, calling for a top in gold and a crash. They don't understand that the gold price drastically underperformed the consumer price index for many years. So yes, I think on average it was rising, what, 7% per year over the long term, over the last 20, 25 years. What I think it's outperformed the S&P 500. Shockingly, the gold price in US dollars, it's outperformed the last 25 years, but it
Yeah.
still underperformed the consumer price index because for so many years it was under $2,000 gold, and the inflation adjusted CPI gold price should have been over 3,000, like 3,500 years ago.
Yeah, I mean, even I had a look at Berkshire Hathaway from 1998 till now. Gold has pretty much held its own against Warren Buffett's company. And yeah, a lot of the people that have been calling tops in gold, they're people who don't understand what gold is, I think, and don't have gold. You know, they just trade thing.
So
They're just
it's
traders and speculators, and they probably missed the boat because they're always bearish gold. And so there, yeah, that's the way I see it.
They are always bearish gold, Mario, but it's even worse than that. They have the worst bias or confirmation bias. I mean, I was on the phone with a hedge fund manager for about 2 hours. I interviewed him and recorded an interview, former hedge fund manager a couple years ago, and he went on this anti-gold rant, how much he hates gold for like over an hour. And I was like, why? And he liked Bitcoin, but he hated gold, and it made no sense to me whatsoever. And I was like, what are these guys' biases? Is confirmation bias? A prudent person might own some Bitcoin, might own some gold, might own some stocks or real estate. He just hated gold. I couldn't explain it. He just went on his, anyone who sells gold is a crook or a criminal. And I was like, well, the gold price is still going to go up because the central banks are dollar cost averaging each month. Didn't want to hear
Yeah.
it.
Yeah. Well, there's a lot of crooks and criminals that hold paper dollars as well.
Well, also, I let me also add, there's a lot of crooks and criminals that are bullion dealers that were ripping people off and overcharging. So people have to be
Oh,
careful out
that
there with
that
bullion.
true. Yeah, but there's also brokers that rip off people,
Well,
stockbrokers.
well, it's the financial industry. There's always
Yeah.
you most of
Oh,
the
yeah.
financial jobs are sales, right? Or
Yeah,
the
you have
stockbroker.
with bullion dealers, you have to use reputable dealers that have been in business for a long time, I would say. Yeah, but you have to do your due diligence.
Especially if they're saying that they were going to store it and stuff like that. Because like a lot of the ones that said that they were going to store for you, that's where a lot of the problems were. They were running fractional reserve scams
Yeah,
or inventory problems. Yeah.
yeah. I mean, when I first bought gold in 2002, I did my whole own homework, and I never thought, I bought some Krugerrands, and I didn't think of storing it with anyone. And yeah, the bullion dealer didn't even offer it. Just bought some coins and took it home.
And that's prudent, but I mean, like some people, the ones who stored it at some of these bullion dealers, that's where because a lot of these bullion dealers over the last 10 or 15 years, they've gone bankrupt. They had inventory
Yeah.
management problems. Amark, which is the largest company right now, they're publicly traded. I mean, they've been buying up some of these numismatic and bullion dealers and wholesalers and refiners. Are buying up, consolidating the entire industry like crazy lately.
Yeah, I mean, it's unfortunately, yeah. There's a lot of scammers in all industries, gold included. So you have to be really careful.
No argument for me on that one. I mean, you've been in the financial industry longer than I have. You know that like the average stockbroker, it's a sales job, right? So there, a lot of the times, the bullion bank, not the bullion bankers, the bankers in London or New York, they're selling whatever's the highest commission. I hear now that they're trying to sell this private equity garbage funds to
Oh
retail
yeah,
investors. So they're trying to
yeah.
offload private equity investments and assets that are worth pennies on the dollar, trying to dump it onto retail investors for high commissions.
Oh, definitely. And I think it's because the existing investors, the wealthy accredited investors, they won out. And these private equity funds can't give them the money. So they're looking for bag holders. And yeah, it's a big red flag. And I think I've spoken about this to my viewers and to really be careful about private equity.
Well, anything Wall Street's calling on the phone about selling, I mean, they were trying to sell mortgage-backed securities, I think, to retail investors. My grandma bought some before she passed away in 2006 and 7. She did not have a financial education. She inherited a bunch of money from my grandfather when he passed away, so she didn't know what she was doing, and she got fleeced by a stockbroker for $1 million. So when she inherited the nest egg from my grandfather. So I mean, like you have to be careful if Wall Street and the brokers are on the phone all the time. I mean, they're selling whatever's the high commission.
That's right.
So, Mario, I really enjoyed our discussion today. I'll put a link to your YouTube channel. Is there anything else you want to promote? Do you have a Substack with some research articles?
No, I mean, I do have a Substack account, but I don't really write anything there. But so, I mean, I have loads of people following me there. I don't know why, but no, just YouTube at Monaco64. And I'm also on X at Monaco 1964. So I've got, I'm fairly active there, and I've got like 26,000 followers on X.
And for the listeners out there who are paying attention to some of these experts that are calling for a crash in the gold price, some of these guys have been predicting a crash in the gold price every month or two for the last 4 or 5 years, some of them even longer than that. So you have to check their track record. I won't name names, but there's some of these people out there that literally they get like 100,000 views on their YouTube videos. And I think they're paying for the boost in the videos. And they've literally been calling for a crash in the gold price every month for the last 3 or 4 years. It's kind of ridiculous the predictions that they made, how wrong they've been.
Yeah, that's right.
Yeah, it's just really sad. I mean, like I have people sending me these stuff and saying like, "Oh, you don't know what the gold rally's over," and it's like, do you even know this guy's track record? I mean, he literally makes predictions, saying the gold price is gonna crash like every month or two for the last like yeah for years
Uh,
now.
well, what I tell people is if you trust politicians now, if you trust central bankers, and if you think like, yeah, governments are gonna go into surpluses and pay off the debt and stop wars and stop inflation, then you sell gold. But if you don't, hold on to it and keep adding.
I mean, if anything, Mario, I think those things are accelerating because Trump is what doing. We're looking at export bans of goods, of commodities, rare earths, things like that. We're looking at retaliatory tariffs. Now, we did have one trade deal, and it looks like some of those come down, but I don't know if that's going to happen with everyone. So I think things look like they're going to get worse before they get better.
I agree. I agree.